Week 20 of trading in 2016 has passed. Let's have a look at what kind of opportunities and new developments markets are bringing about. Now, let's do this a little bit differently this week, ending up the video with a little bit of what is much more important in trading than simply focusing on the trading system and the entries, with a more of a philosophical point that I would like to make. And the charts I want to talk about first should underline this point. Now, over here, when you take a look, it's the gold chart on a weekly basis. I have been mentioning this for weeks now. We are trying to follow the uptrend that is establishing in this commodity, even though the past 3 weeks, as you can see right there, haven't been too profitable if you are long. Now, as a trend trader, I am simply trading the breakouts, and breakouts fail, 60%, 70% of all breakout trades following a trend, or where the intention is to follow a trend, actually fail. And you have to have a plan on where to exit and how much you are willing to lose on these 60 to 70% losses or break-even trades. And gold, we don't really know if it will simply trade up during the 21st week, the coming week of 2016, or if it will be much weaker throughout the coming months. The breakout had been hit right above here. I think it was even a new 52-week high, and now we see a retracement from that high, and it's been quite bearish. It's been quite rapid. It's not just correcting a little bit from what it looks like, but 3 weeks have been straight down. We really have to see where it goes. Right now I'm still long in here, but as soon as price keeps coming down and touches this balance zone where it really wants to be, so it can breathe after all of this move to the upside, I'm not waiting for it to finally turn around and trade to the upside again. Rather, I would quit my position with a small loss and wait for a new entry. So even though gold looks so bullish, or it did look so bullish even on a monthly time frame, you can see, let me just remove all of these drawing tools. You can see that gold, after having done this up move, it corrected, and now it has traded through the balance zone, and it does have a potential to continue this previous move to the upside. After a 4-year correction, it might as well make new all-time highs, but that doesn't mean that you don't get internal corrections on your trading time frame. It doesn't matter if it's the daily or if it's the weekly. You will quit your long position here and there. You will exit it, and it may even mean that sometimes you're exiting it with a loss, even though the overall time frame seems to be pretty clearly moving into your direction. But in gold here, we might as well just have to wait and see if at this point a fractal will be created, which would mean prices coming back into the balance zone. All of those 3 moving averages would mean that price could find support right above them or on top of them, and then it turns around and makes this trend that I'm actually waiting for, as it has turned around through the balance zone in here. But nobody knows when it's going to happen. Nobody knows if it's going to happen. So just following the price should help us survive until the next great move comes, even if it's not in gold but in some other asset class. Now, the same is true if we take a look at the Dow Jones index. Again, let me remove these drawing tools so we can see where this is trading. Obviously, as I mentioned, in the past couple of weeks, you get this side move, and the side move was not finished in the last couple of weeks. We did see higher prices last month, but it didn't really break through to the upside. Instead, it's taking a pause, and it seems like this whole correction here is not over yet. This is the monthly time frame. If we go on the weekly, we can see that over here we had this resistance being broken. This fractal had been broken over here, and you did have, as a trend trader, as a breakout trader, you did have a indication that it could just follow through, and the market might have finished this type of correction, and you do get a new bull market or a new trend to the upside. But it doesn't seem like this is going to happen. I don't know. Simply following this market, it has been telling me in the last month that the tendency to the upside has been lost. All of this kind of movement is now being over from what it looks like, and we are back into the balance zone below the first moving average, which is the trend exit, and it seems price is now fighting. It's really sitting on top of this support area here, marked by this green moving average, and we will see where it continues to go. We of course just follow the market, but we never know when the next move comes. So this whole idea of not knowing when you will make your money, not knowing how long it's going to take, and also not knowing which of the positions that you take will be the profitable ones, is a pretty hard concept for a lot of people to deal with in trading, because I guess most of the retail traders get into the game to make a lot of money, probably pretty quickly, quit their day job and just living the dream. But I think they are mistaken when it comes to actually knowing how much work you have to put into this to kind of grasp the most simplistic and the very easy concepts. This is not a very complex and world, or a world where only the IQ decides on how successful you will be, but it's actually more down to earth. The calmer you are, the less you think about the markets, and the more you think with the market, the more successful you will be. The problem, of course, is that even when you do that, you still have no idea when the next great move will come that will make you 10-15% on your account, and making up for all these smaller losses that you took beforehand. So when putting on positions and when trading all throughout the year, and it doesn't really matter if you make 100 trades in a year, if you make 50 trades in a year, or if you make 2,000 trades in a year, you want to make sure to stay humble and really let the market do whatever it does. I was just listening to a podcast from Michael Covell where he was talking to Cole Wilcox from the Longboard Mutual Fund, and he was talking about the market being like an ocean, and you just, when you are a surfer, you want to ride the waves, but you cannot control the waves, you cannot control the ocean. You just have to take what is there and extract from it whatever your system or your trading rules offer. So it's very important that you're always on top of your game, that you're always there to take the small moves, to take the small waves, to take the big waves, because you don't know, and at the beginning when you start riding them, how big it's going to be and how long this wave is going to last. So in this regard, if you really think about it, following your rules, being disciplined enough, having the patience to really let the market do whatever it wants to do, whatever it does, without you having any control over the next price tick or the development of the next 2 years, you're really creating your own profits. By following your rules, and by having certain trades that come in really handy when you are a trader, or when you want to be a successful trader. You notice that it's all about a creative process. It has nothing to do with you going to school, following a standardized curriculum, taking a test, an exam, finishing it up with an A, somebody patting you on the shoulder for how well you have done, and then you're set, ready, and go. You'll be that millionaire for sure during the next year. That's just not how it goes when it comes to trading. You should check out my performance page on my blog and use the link to the managedfutures.com website, where you can see the top performing hedge funds. And when you look at their monthly performance, you can see what I'm talking about. It's not a straight line. Performance does not move up straight. You will have these times, months, even years, where you don't make profits. But since you're controlling your risk, you're just sitting there waiting for that next move to happen, and as soon as it does, it's not really a question of if it will happen. It's much more a question of when, and that when can actually take a while, depending on how much capital you have, and how often you can trade, and what you can trade, and how many markets you can trade, how much time you have. You want to make sure that you adapt those circumstances to your personal life, to your personal circumstances. If you have a family, if you have a day job, you simply can't trade on the 1 hour or the 4 hour chart trying to catch trends for the short or medium term. You really have to think about it and look at it as a business. It's not just clicking some buttons and becoming rich. It's much more than that. Even though the pure activity of trading should actually be very minimal, the execution of trades, putting in the orders and exiting a trade and changing a stop, it takes seconds. You look at a chart, you know your system, you know your price, you know your indicators, and then it's not a matter of discussion and actually analyzing in the normal sense of the being. It has much more to do with just seeing it and doing it, and then shutting it off and going away, and then letting the market do whatever it wants to do. In this regard, you hear so many different opinions on trading and what the right way is. If you are on Twitter, on Facebook, you get so many sources, even on these different podcasts, Michael Cowell, the Better System Trader podcast, or the Chat with Trader podcast. They're all really great, but the people who come on there, they can be of very, very different niche than you are, and the information they put out sometimes is even a little bit insulting to other people who make money just as well in the markets. But there is no right way. There are 1,000 ways to create your own profits in the market. You just have to find your own niche, and you have to study for yourself. There is nobody who can really help you when looking at all of these educational materials. You want to make sure that you filter the information for your own needs and for your own benefit. There is no need to keep on questioning what you've already found for yourself to be true. You just have to move along and put it to test and actually trade it, document it, and see how it develops over the long term. This, of course, again requires all of those traits I've mentioned before. Patience would be one of them. Discipline is yet another. Thank you very much for watching this week again. See you soon.